Hey guys, what's up? Alec back with the daily stock market, and look at that, an exciting day after a Thanksgiving rally. At the beginning of the week, we did see stocks rally a little bit with a little Thanksgiving rally going on. Right now, we see a lot of stocks down around 4% on Activision Blizzard. So let's dive into some of these stocks because Activision Blizzard is an interesting one to be talking about. We have Alibaba as well. Make sure you like this video and subscribe with post notifications on YouTube. And I just want to thank you guys. Take a second out of my day today just to be thankful for all my subscribers, everyone who hits that notification bell and likes every single one of these videos. Thank you for being there and supporting on Instagram and on YouTube. Hope you guys all had an excellent Thanksgiving also, by the way, with your friends and family. So the first one we have to talk about today is Activision Blizzard. Everyone's wondering what's going on. Down 4%. They were supposed to be getting acquired by Microsoft. In the last month or 3 months, they're down 7%. In the last year, they're up 19%. But this big spike back in November to January, where Activision Blizzard went up 40%, there was a lot of demand for gaming, but more importantly, there was a huge rumor around a Microsoft acquisition. Microsoft facing antitrust reviews over Activision deal, teams interrogations, managing to sidestep the regulatory scrutiny that has embroiled some of the big tech peers like Facebook, for example, or Meta. That's getting huge antitrust reviews and laws and speculation and scrutiny right now, like Meta. That's why we see Mark Zuckerberg getting destroyed and the stock also getting destroyed. Microsoft seems to have sidestepped this right now, but we see recently after this Activision Blizzard ATVI acquisition was trying to be commenced, which by the way was one of the largest acquisitions to take place if it did commence. We now see Microsoft facing multiple antitrust reviews related to its proposed purchase, as well as interrogation of Team Software. Microsoft stock was flat on Friday. We see that the Federal Trade Commission is likely to file an antitrust lawsuit. By the way, that acquisition was for $69 billion, making it one of the largest acquisitions if it did take place. That was for the video game publisher Activision, which we already went over. Microsoft announced the deal in January, offering to buy for $95 per share. Activision is $73 per share, by the way. Video game rival Sony has opposed the Microsoft Activision combination. Sony is worried that Microsoft could make Activision games like Call of Duty one of the biggest games series exclusive to Xbox consoles and Windows PC, which would disadvantage Sony's PlayStation consoles. However, Microsoft has repeatedly promised to keep Call of Duty available to Sony PlayStation hardware. But you can see why this seems like it's going to be a monopoly in the future. If it's not a problem in the near term, it definitely could be problems for Sony and PlayStation 10, 15, even 20 years down the road if Microsoft is acquiring Call of Duty and other big gaming franchises. We also see that Google has also opposed the Microsoft Activision deal. Google has argued that the combination would also give Microsoft too much clout and cloud gaming. Antitrust regulators in Europe and China are also revealing the Microsoft Activision deal. So it's a lot of scrutiny. It could be one of the biggest deals if this is pulled off. You can see that Microsoft stock is flat right now and Activision stock is actually trending down since the company announced the transition, a sign that investors are skeptical that the deal will close. In morning trades of the stock market today, Activision fell 4.3% to $73 per share. Meanwhile, Microsoft stock has alternated between modest gains and losses. In recent trades, it was up a fraction to $247 per share. Elsewhere, the European Union is preparing an antitrust investigation. Overall, after all that news, we see Activision Blizzard stock down 7% in the past 3 months. And it seems like it is going to be trending under $70 per share because there's going to be more scrutiny over this deal right now for it not closing. If we scroll down, we can see that there's a large volume being traded on ATVI right now. Market cap 58 billion, PE ratio 35, implying for a value stock or a value investor, you're not going to be buying this stock and you're going to be holding off at least until Activision Blizzard's closer to $50 per share or under 60. All right, it is a dividend, by the way, 0.6. And if we continue to scroll down, we can see that they are trending towards unprofitability as well. Q4 2021, when the pandemic was more in a full swing, we saw more earnings taking place, more EPS taking place for this company at that time when there was more demand for gaming. The Bulls are saying right now the firm is home to not only some of the largest franchises, Call of Duty, Diablo, Warcraft, Heatherstone, and Overwatch, but also some of the best in the industry development talent. Okay, Call of Duty will remain one of the top selling shooting games on an annual basis. The franchise will also continue to adapt and changes in players' preferences. And we've already seen that with Blackout coming out with battle royale genres to combat with things like Fortnite. Activision has also established a record of creating multi-billion-dollar franchises and consistently develops new revenue streams through its innovative value-added methods. Okay, so with that being said, all in all, I think if you're a gamer, you're a big gamer, you game a lot, especially those couple games that Activision Blizzard owns, I would start investing into Activision because if Microsoft does acquire it, which is probably looking like a 25% chance at this point, a long shot that they'll even get acquired, they will be getting acquired for above $90 per share. So for Activision to get back to $90 per share, or even get to $90 per share, because the highest we ever saw Activision was around $103 per share, I think it's definitely possible, but it's going to take some time for these wrinkles to get ironed out between this deal going on with Microsoft. Now, if we see them drop closer to $60 per share, like we definitely have seen in the past, and it's definitely possible if this contract continues to get hairy with games like Activision, then it's going to be attractive under $60 per share and even closer to $50 per share. I doubt they'll drop under 60. So that's my price alert. So I'll be setting price alerts at $60 per share. And once that price alert goes off, I'm going to be reviewing and doing another update video to let you guys know if I'm buying or not. So make sure you're subscribed with post notifications on so you get that alert next time we do an update on Activision Blizzard. Now, by the way, if you wanted to see what the analysts have to say about ATVI, they have on average a $92 price target in the next 12 months. We see a 26% upside potential. The lowest analyst has them at $83 per share in the next 12 months. Now, I wanted to mainly focus this video around Microsoft and Activision Blizzard, but let's talk about Alibaba just a little bit here. Down 4%. The market's pretty flat today, and for Alibaba to be down a lot more than the market on right now, there's obviously something going on. Right now, we have coronavirus a little bit spiking in China, which could trigger a shutdown. Remember, they have a zero tolerance policy going on in China right now. So if we see a big spike in activity for COVID cases, it could be concerning for these stocks to have another shutdown going on. All right. So obviously the only and the main concern is a shutdown again in China for Alibaba stock. And if that does happen, we can see Alibaba under $70 per share again, closer to $60 per share in my personal opinion. Remember, this is not financial advice. This is just my own opinions. And I think in the next 12 to 24 months, we can see Alibaba on a mega heater. Now, to get back to all-time highs of $200 per share, can that happen? Of course it can, but I think that's going to take longer, to between 3 and 5 years. So if you're a long-term holder of Alibaba, you definitely could see some gains if you buy under $60 per share. Personally, it's a little bit risky for my taste, so I wouldn't be putting any large amount of money in any ADR stocks, which are just Chinese-based stocks or international-based stocks in general. Here we can see what Robinhood defines it as. ADR represents shares of non-US based companies. And here we even see some headlines backing up my thesis. Alibaba, NEO fall over 2%. Hong Kong stocks weaken as record China COVID-19 cases alarm investors. And real quick, we'll go over some bullish points on Alibaba. We see that Chinese commerce adjusted EBITDA margins were 32% higher than JD Retailers' 3.1% non-GAAP EBITDA margin and PDD's 12% non-GAAP EBIT margin for the 12 months ending in December. Core annual active users on Alibaba's China retail marketplace has a retention rate of over 90% at the year end of 2021. So that's definitely something to consider. Alibaba has a lock on the game. They have staying power and they have that unique, compatible durable advantage amongst its peers. So I think Alibaba will be around for a long time. The risk is, will it get delisted because it is an ADR stock? You don't know. Okay, the PE ratio is also 200. Keep in mind their EPS is around $2 per share. In one of the next videos, we'll also dive in the fundamentals a little bit deeper because they have great revenue, they have great net income, and they have a pretty good balance sheet. So make sure you hit that subscribe button so you are alerted next time we do a deep dive on Baba fundamentals. And again, I want to reiterate, thank you guys for all the support you've been showing on Instagram and YouTube. It means the world. Thank you guys so much. And take a second out of your day to think about what you're grateful for as well. Whether it just be that you're able to walk around or that you have $1,000 in your portfolio. Because if you have just $1,000 in your portfolio, you're ahead of 90% of the world. So don't forget that. You're on your way. You're developing your mindset to become a better investor and taking steps every single day to become a more knowledgeable person. That's an awesome thing that you're doing for yourself, and no one can take that away from you. So thank you guys for watching to the end of the video. Share with a friend if you think that they'll find value in this specific video. If you want to join my private trading group, my close friends list, go ahead and click on success number 6 or success number 5 so you can see some of the success stories that we've had over the past couple weeks. All right, guys, thank you so much, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.